How's it going, y'all? Duncan Foster, Berkshire Hathaway Home Services, Florida Network Realty, here in our beautiful new Mandarin office, here with my really good friend, Thomas Borchmann from Fiber Mortgage. Thomas, want to introduce yourself a little bit more?
Yeah, so my name's Thomas. I work for Fiber Mortgage. We are a local brokerage here in Jacksonville, Florida. So we can pretty much do just about every kind of loan you got, whether it's first-time home buyer, if you have, you're an established buyer, investors, self-employed. So pretty much anything you need, one-stop shop, got plenty of options for you.
Thomas is an amazing guy. Talked to him a lot. He's got a little newborn, just got married, things like that. Running all around the house. Not really running, but getting there.
Yeah, he's crawling. Well, he's rolling. He's only 3 months. Not crawling quite yet.
Right.
But
he's getting there. Exactly. He's getting there. Great guy. Love working with him. Today we're going to go into what we're seeing in the market right now in terms of interest rates being on the rise, what that's leading to in terms of the future of real estate, and what we're overall seeing in the market just as a whole in real estate and in the mortgage realm. So, Thomas, I just want to kind of start out. What are you seeing? We've had a really big increase in rates overall across the nation. What are you seeing in terms of, we went from maybe mid-twos beginning of the year into last year, we're at what? What are you seeing right now on the average?
low sixes.
Low sixes?
Low
Exactly.
sixes about the average. So what I'm seeing right now, low twos, artificially low. Obviously, we're coming out of the pandemic that they were trying to stimulate as much as they could to prevent an economic collapse. So low twos, totally artificially low. Not likely we're going to see those in the next 20, 30 years. However, probably see low fours, high threes again in the next few years. This kind of depends on what takes place over the next few years.
Got that right.
Yep.
A lot of outside circumstances going on for sure.
Pretty much. However, we're not seeing a decrease in home appreciation. We're seeing a decrease in bidding wars.
Yeah.
Most of my buyers are getting, winning their offers because, hey, it's not 32 offers on this house anymore. It's 5.
Right.
All right, cool. We can work with 5.
Exactly.
You can get in the game, talk to 5 different people, and go, okay, what are you willing to do? What are you willing to do? What are you willing to do?
Absolutely.
And kind of pick from there. Whereas when it's 32, you're a realtor, it's a little overwhelming. It's a little overwhelming.
Very.
Yeah.
Very. Especially when you're a buyer in that situation, you don't know what you're going up against with those other 32 offers, and when you're the seller, you don't even know where to start.
Yeah.
I mean, I've had to make Excel spreadsheets of this is what this offer has, this is what this offer has, this is what differentiates all of these, this is what you're going to net from all of these different ones. How do you want to proceed with this? And it overwhelms the sellers all day long.
Oh, yeah.
And these buyers, when we've had all these big bidding wars, they freeze up. They don't know what to do. So it's good to see the market level out almost. It's not going down necessarily. We still have month over month in at least Jacksonville, Florida, we had 3.9% appreciation month over month, and year to year we were at 29% appreciation from May 2021 to May 2022. So still seeing that increase. It's just slowed down a little bit more from where it has been.
Yeah, you can't do 40% a year every year.
Exactly. It's kind of unrealistic.
Yeah, you can only grow so much so fast before you kind of got to slow down a little bit.
Exactly.
So that's kind of what we're going to see. Still going to have some appreciation over the next 3 years, small projections that I'm looking at, and that's pretty much across the country. Some states a little bit more, some states a little bit less as far as the percentage, but overall still growth over the next 3 years. Heard a lot of hesitation over rates and thoughts of an impending crash.
Definitely.
Rates are going to come back down. You're going to buy a house now, it's going to appreciate. Rates are going to come back down probably 2-3 years from now. You're going to have equity in that house. You can do a rate term refinance, bring your rate down, and then they're going to start saving money off of that right then and there.
Oh, yeah.
On a house that you now have equity in.
Absolutely.
Rather than waiting for rates to come down 2%, buying that house that's appreciated another 10%, and coming in straight from the get-go of not having any equity in the house, not having as much room for appreciation. Florida in general, I'm looking at the prices and I'm kind of starting to see it's catching up with the rest of the country as far as East and West Coast properties. Florida used to be by far a bargain state.
Oh,
you got so much more for your money than most other states.
Right.
So it's kind of, I don't think it's overpriced. I think it's just finally caught up with the rest of the country.
Yeah.
So there's that. It's also got a lot more stuff to offer now.
Yeah.
In Jacksonville alone, the average income's going up. So
Absolutely.
housing prices are going to also go ahead and reflect that as well.
Definitely.
People are able to spend more. The sellers are going to want to get more.
Absolutely.
So
Absolutely.
yeah.
And that overall growth in Jacksonville, it's being fueled every single day by all the new developments that we see. I mean, just driving up and down the road, I saw 3 different places where we're getting new business centers, we're getting new parking decks for business centers, we're getting new overall just communities being built.
My tire light came on today. One of those work trucks probably dropped a nail.
Oh yeah, it happens all the time. That's why you never really want to go out to Clay County, because they've got all kinds of stuff going on out there. That's for sure.
Yeah, you just gotta drive around with magnets on the front of your truck, right?
Pretty much. But hey, as long as you're going to something for work, tax write-off.
Oh, that's pretty much every time I drive my truck nowadays.
Hey, you gotta be tax advantageous somehow.
Exactly.
Yeah, but we can get into that another day.
Oh, I mean, come on. Buying a house is tax advantageous as well.
Yeah.
When you're renting, you can't write any of that off.
Exactly.
So,
Exactly.
Yeah.
So let's go into that a little bit. What are you seeing in terms of monthly rates for the mortgage in relation to purchase price for a house? Are you seeing it being comparable to what rent is in Jacksonville, less, more? What are you seeing in those terms?
It's definitely not comparable. Rent's always going to be more expensive.
Right.
Unless your landlord absolutely loves you and they're like you're their favorite niece or nephew.
Right.
They're going to adjust the rent according to the market.
Definitely.
So as housing prices go up, rent goes up, and it outpaces the housing price. So get in a house, 3.5% down. Guess what? You might be paying mortgage insurance for a little bit, but again, 5 years from now, you're going to really thank yourself. There's going to be plenty of equity in that house.
Absolutely.
And then 2 years from now, you'll probably have enough equity in that house if you just do a rate and term refinance.
Mm-hmm. Like we talked about earlier. Yeah.
Exactly. And just get rid of that PMI. So
Yeah.
no mortgage insurance. But I've heard people go, if you're paying mortgage insurance, you're just burning your money. Yeah, you are. But guess what? If you're renting, you're also just burning your money.
You're burning even more money at
All
that.
of it.
Oh yeah.
All of it.
Absolutely.
You're not saving any of it. You're not building equity in any of that.
No.
So
No, not at all. Not at all. And it's crazy to think. I mean, you always think, well, if I'm renting, then the landlord pays for all of my upkeep, basically, all the repairs that are needed, all of the electrical work that's needed, all of those things like that. Not really.
No.
Because your monthly rent is what fuels his expenses that he pays whenever something goes down, whenever your dishwasher breaks or your fridge line gets burst and things like that. Or if your house floods and you are a renter, everything you've been paying for month to month covers his mortgage plus any expenses that he's got to pay.
Yep.
So when you really think about it, you're not really paying yourself and you're not saving any money whatsoever when you're renting. You're paying someone else. So you're kind of living on borrowed time, unfortunately.
And then you also got to call to paint the walls. Like, hey, I want this room to be blue. All right, cool. Better call and make sure it's okay.
Exactly.
Because you do anything without the landlord's permission, hey, guess what? You don't get creative rights here. It comes out of your security deposit. Now I got to paint the walls white again.
Right. Oh yeah. Oh yeah. Or wallpaper and things like that. Oh my gosh.
Yeah, don't get me started with wallpaper.
Really?
It's Florida. It's humid. Come on, that stuff's gonna be on the walls. It'll fall off in 10 years.
Oh yeah. You'd be surprised at the older homes that we show over in Avondale. It's abundant, to say the least. But it's all peeling up, and you're like, oh, what's under? Oh yeah, that
Wallpaper.
old vomit-colored paint from the 60s, 70s. Yeah.
Oh, the ones with lead chips on?
Yeah.
That's
Exactly.
my favorite flavor.
Oh gosh. So we're seeing all these things coming into fruition with the real estate market right now. We're seeing these increase overall in pricing as compared to years past, months past, weeks past even. What is it that you're seeing? Are you seeing, from your perspective, working with the buyers that you work with, are you seeing more opportunities for them to go out and look at different homes? Are you seeing more inventory come on the market as well, like we are in real estate, or is it kind of separate from that?
Two sides of the same coin, my friend.
Okay.
Two sides of the same coin. So, I work with buyers, I don't work with sellers, so
Right.
I don't have, the experience with sellers that you do. But with buyers, buyer fatigue that you're seeing set in from the last few months with all the bidding wars.
Definitely.
Yeah, we're starting to see a little bit of an ease up on that. There's more inventory for them to pick from. So, just all around market shift. Anytime a market shifts, you got people that freak out because it's not exactly what they're used to for the last however long.
Definitely.
So, especially newer people, not all the newer agents, but a lot of the newer agents, you're still younger, you understand.
Yes.
It's the crowd that started about the same time you did.
Yeah.
That panic a little bit.
Definitely.
Like, hey, this isn't the exact same market that I started in.
Oh yeah.
Now,
Mm-hmm.
so every market changes.
Oh yeah, and from a professional standpoint, I mean, if you can't roll with the punches when the market changes, if you're getting while the getting's good, more or less,
Mm-hmm.
as you guys probably say over in Texas where you're from, if you can't sustain your business when it's good and when it's kind of slower, when you kind of have that little bit more inventory coming in the market, you kind of have to work more to sell your home and to sell your listings, and you kind of get a little bit more inventory coming in on the buyer side. If you can't be successful in both aspects of that, why are you in this business? More or less?
Exactly.
I mean, and every opportunity is there to grow. And I'm not saying if you're having no success right now, right when the market shifts, go ahead and get out. Do not misunderstand what I'm saying.
This is an opportunity to see where your strengths are, where your weaknesses are, and kind of bolster them up.
Absolutely.
So,
absolutely.
like,
do a SWOT analysis.
Yeah.
As they say in business school.
So, I got mortgages. I'm good with numbers.
Right.
I can read.
Yeah.
I'm not gonna write a book.
Speaking of books, actually.
Yeah.
This video is sponsored.
So my wife wrote a book. Okay, great. She's writing another one. Okay, awesome. Yes, my wife's wordsmith. She's an author. She's amazing. So yeah, that's her strength.
Nice.
But I handle all the finances because she doesn't like looking at numbers and spreadsheets. Guess
Exactly.
what? I can look at numbers and spreadsheets and graphs all day long, and it's like, okay, cool. I get that. I understand that. This is actually kind of fun. Yeah, if you want me to write a book, it's going to be Thomas went to the store. Bullet point. He stopped at a red light. Someone ran a red light when his light turned green. He didn't go get hit by that car. All right, cool. Now we crossed the road, turned into Publix, got food, and it's all going to be bullet points. I don't write stories.
Exactly.
Yep.
But all that to say, you know your strengths, you know your weaknesses, you know your wife's strengths, you know her weaknesses, and you kind of get together and form that team. And it's the same way in business. It's the same way when you're running your own real estate, when you're running your own mortgage side of things. You've got to grow.
Exactly, and that's why you've got real estate agents that can be a good solo agent, and you've got some that are good teams.
Yes.
So if you've got a realtor that's really good with generating listings, but they're not so good at writing contracts and offers and negotiating on that side of it,
absolutely.
Then if you've got, I've seen a lot of husband and wife teams. One handles one side of the business, the other handles the other side, and it's their strengths.
Right.
They complement each other. So that might be an option for some agents as well.
Absolutely. Absolutely.
The train of thought that I had right now just fell completely out of my head. But we're going to get back.
It's all good. It's all good. It's all good. So kind of shifting gears a little bit more, we briefly touched on, interest rates are on the rise, housing market's changing. Where is it that you see the market going in terms of, are we going to crash immediately, crash and burn in a month? Are we going to sustain, grow even more out of this? What are you seeing? Are we going to kind of flatline a little bit and get back to normal?
So I think we're going to still see growth. We're going to probably see a little dip as houses come on the market. Inventory's kind of jumped significantly over the last, month and a half?
Yeah.
So that'll cause a little bit of a dip because there's going to be more supply.
Right.
But we also have a lot more demand. So that little dip, it's going to come right back up. But it's because of interest rates going up, it's going to be a little bit more of a steady growth instead of rapid growth. Think of it like when we're kids. I've got a little 3-month-old. This thing's growing like a weed.
Right.
If we grew that fast our entire life, we need bigger houses.
Oh yeah, talking about no sustainability.
Exactly.
I mean,
so you get to a point where you grow
into,
and then you have steady growth from there. So
definitely.
Same with markets.
Oh yeah.
The only thing is, we can't buy a house for $7,000 like our grandparents did nowadays.
Exactly.
And realistically, our grandkids are probably going to be spending $2 million on a house we bought for $200,000 just because of inflation.
Exactly.
But houses appreciate with inflation. So better than stocks as far as an investment.
Yeah.
Better than renting because you're not burning your money up. So I do see a little bit of a slowdown in the growth, but the crash in 2008, which a lot of people keep saying, oh, that's going to happen again. There's a lot of safeguards in place because of that.
Absolutely.
That don't allow it.
Absolutely.
So back in 2006, 2007, a lot of loan officers just became order takers.
Right.
They were just saying, okay, cool. What do you want to buy? All right, that $2 million house? Great. You're a fry cook at McDonald's and you work part-time and you're going to school? Yeah, sure, you should be able to afford, a $10,000 a month mortgage payment when you make $15,000 a year.
Oh, yeah.
Yeah, totally. That totally makes sense.
Oh, yeah.
So that's where all those foreclosures came from. Bad loans being written. Will you always have foreclosures? Yes.
Definitely.
This market, I don't understand how we're still having any of them.
Right.
Because realistically, it's just stubbornness.
Yeah.
For the first time I've ever seen, you're seeing people foreclosed on with a lot of equity in their house.
Definitely.
I'm sorry, list that sucker. Get it on the market, get out from underneath it, and put some money in your pocket.
Definitely.
You might be struggling to make that payment because, whatever reason.
Yeah.
I don't know, you broke your leg, couldn't go to work for a few months. Well, you've got $100,000 in equity. I'm pretty sure if you sold that and paid off your bills and rented for just a little while, turn around and buy something, the next year.
Exactly.
Get foreclosed on, you got 3 to 7 years before you can buy, depending on how you foreclose.
Exactly.
Well, bankruptcy and all that fun stuff. So, yeah.
All the stuff we never want to hear, but
Yeah, exactly.
we got to know about in order to be successful.
Oh, yeah.
Exactly.
So, it's just a matter of moving your pieces correctly.
Exactly.
So,
And unfortunately, you and I talk about this a lot. Financial literacy is not taught very well.
the consequences of what you just bought.
Right. And we're seeing more and more people come out of high school, college, grad school, whatever it is education-wise that they go into. They understand their finances. They understand how to run their own financial well-being. But a lot of people just plain don't. And those are the kind of people that there's no point in really belittling them because they just weren't taught any better, and there's nothing wrong with that. It's a teaching moment for them. It's a teaching moment for them to come to you and say, look, I've been renting for 15 years, 20 years, whatever the case may be. I'm ready to make a change. How do I do this? So when you're dealing with someone who's been renting, I call them a serial renter, because they can buy, they just don't know how to buy. When you're dealing with someone who wants to make that transition, what's the biggest step for them to take?
Just understanding their debt to income ratio. I think so many people think that they have to build their credit in a way that buries them in debt.
Yeah.
And perfect example, young lady comes to me maybe 2 months ago, wanting to buy a house. Modest price, she's not trying to spend a whole lot. 3.2, 2.1.
Definitely.
Not really looking for much.
Yeah.
She went out and bought a car the month before because she thought that buying a car would help her establish credit, so she'd buy a house. No, it just made her DTI way too high.
Right.
So, unfortunately, she either has to sell a car and buy something that she can pay cash for, or wait till that car's paid off, or wait till she has a massive increase in her income to be able to buy it.
Right.
So, there are tons of other things you can do to establish your credit. Take out a credit card and don't max it out.
Yeah.
Just your revolving debt, but use it once in a while. Maybe fill up your gas tank with it every couple months so they don't close it on you.
Definitely.
But don't live off of it. Pay it off as soon as you use it. Little things like that. So there's a guy that teaches financial literacy. He's really good, and I think it works for a lot of people. It's good practice to live by, of not being buried up to your eyeballs in debt, spending, buying cash wherever you can.
Yeah.
But one thing I don't agree with them on is not having any credit cards, not having any kind of credit.
Definitely.
Because yes, you can do a manual underwrite on someone that has no debt, no anything, no credit score, just shows doesn't exist, no open accounts.
Right.
But it's more expensive.
Yeah, exactly.
It is.
Yeah.
It'll cost you 1%.
Wow.
Yeah.
Didn't realize it was that high.
Yeah,
Wow.
it depends, but yeah, I mean, it depends on which lender we go through, but up to 1%, whoever will take that loan. I don't know why they do it that way, but they do. Probably because they don't have any idea of what to expect from you.
Yeah.
So by maintaining your credit without burying yourself,
Yeah.
there's ways to do it.
Absolutely.
So it makes the process of buying a house significantly easier.
Yeah.
And realistically, self-employed borrowers have been really the challenge lately.
Yes. Definitely.
Coming out of 2020 and everyone being shut down, you'd be surprised how many restaurant owners there are.
Oh, I believe it. I believe it. Yeah.
There are a lot of restaurant owners, and they didn't show any income
Mm-hmm.
for a year or two.
Wow.
So when they go to buy something, I'm looking at their taxes. They had money coming in to pay their bills. They didn't fall behind on anything,
Right.
but everything was written off
Mm-hmm.
because really they were just paying their bills.
Yeah.
So things like that, self-employed borrowers, we have rolled out a few options for just self-employed borrowers where
Oh,
we're,
wow.
where we're looking at, assets,
Mm-hmm.
savings accounts, things like that, making sure that they have money in them. And then just their not pay stubs, but bank statements, making sure money is consistently coming in and being deposited. So,
Whether it's a write-off or not.
correct.
Okay.
So we can qualify them based on that. That's not something that a W-2 employee can use. Self-employed, that's it.
Nice.
Yeah.
That's awesome. That's awesome.
Yeah.
That's great.
Yeah.
That's great. I didn't even know y'all had that. So
Yeah.
learn something new every day.
Thought I told you about that.
Be something I'll probably be hitting you up for next year or so.
Fair enough, yeah. Yep.
Well, we could probably talk all day long, but in the interest of time for both you and me, and you guys watching as well, probably gonna have to cut short a little bit today.
But they
But
don't want a 5-hour video? I mean, we're going to keep talking after this. So,
Oh, yeah.
But
Oh,
we're
yeah.
probably going to be talking in the truck on our way to go grab lunch because
exactly.
it is about that time.
Oh yeah, it's almost 11 o'clock. Might as well go ahead and get started on it.
Yeah, I mean, first lunch,
Yeah.
and then second lunch after that,
Yeah.
and then pre-dinner, and then dinner. Yeah. It's amazing I'm not 500 pounds.
Well, when you work out as much as this guy does, you're probably gonna have like 5,000 calories just to balance it out. So.
Hey, with the newborn, yeah, hadn't been working out nearly as much, so
Right.
catch up.
Chasing him around the house when he gets to running age, you'll probably burn even more calories, I'm sure.
That's true. That's true.
Well, thank y'all so much for joining. Again, Duncan Foster, Berkshire Hathaway Home Services, Florida Network Realty out of Jacksonville, Florida. Thomas Borchmann, Fiber Mortgage out of Jacksonville, Florida. Are there any other areas that you service other than Jacksonville? Just so they know.
Jacksonville, Atlanta, Georgia. We have offices in both places. We are licensed in Florida, Georgia, Tennessee. I want to say Maryland. I'm not licensed in Maryland, but the company is, and a couple of our LOs are.
Yeah.
So, yep, that's why I forget about that one.
Well, you live and you learn.
Or you live and you forget.
One of the two.
Yeah, no, I don't do either.
Thank y'all so much. We'll see you in the next one.
All right, y'all have a good one.